All right, everybody, welcome to Goodegg Live. This week we are investigating the science of money and emotion, which is the most underrated financial skill you can have in your repertoire. And I want to say today, if you have any questions as we go, please go ahead and put those in the Q&A box, and Jason's going to pay attention to those. So I'm Susan Elliott from Goodegg Investments. I'm the director of Investor Education. I'm here with Jason Kleiman, who is in Investor Relations and Business Development, and together we are the powerhouse behind helping investors understand the types of passive real estate investments that are options that are out there, and how we work here at Goodegg Lives, or at Goodegg Investments. So that's Goodegg Lives in a quick glance. Welcome everybody as you come into today's session, and we're just going to get started. All right, so just a quick, if you're new to Goodegg, we have been in this space for 5 or 6 years now. We have over 8,000 multifamily units. We also have now over seven hotels in our portfolio. We really love hotel investing, especially in this market cycle. We've distributed over $30 million of passive income to our investors, which we're really, really proud of, as well as a 2.8x equity multiple, which has been really profound in the past market cycles to be able to give that to our investors. So we've done a lot in this space. We've exited over 20 deals, and we're trying to help more people realize that they can integrate this form of passive real estate investing into their portfolio. So we don't have to be landlords in order to add real estate to our portfolio, which is a big a big limiting belief that at least I had when I started in real estate investing. So that is why we're here. We try to provide the education to get everybody up to speed on what is passive real estate investing and all the lifestyle components that go into, pursuing financial independence, pursuing financial freedom. Before we get started, we're not legal, financial, or advisory firm. We're here for educational purposes. And we hope that you're empowered with the knowledge we have to be able to learn more. And we also hope that you go and seek these team members for your wealth building journey. Having a strong legal, financial, and tax team on your side is going to really elevate yourself in this space. So please go and seek those out. All right. So today, to get started, I wanted to kind of ground us in this book, The Psychology of Money, that came out a couple of years ago by Morgan Housel. He has written decades in the financial space. And this book is a really great summary of the impact of our psychology, our emotions on our wealth building journey. So he says, doing well with money has little to do with how smart you are and a lot to do with how you behave. And this is the crux of why we're trying to talk about money and emotions today, because if you can understand the emotional cycle, how you behave, you can change your behavior to impact your investing trajectory, right? His decades of research and analysis has showed us that financial success was more dependent upon how we act and not our technical understanding of those investments. In other words, financial success is not a hard science. It's a soft skill. It's where how you behave is more important than what you know. So I really want us to value understanding emotions and our behavior, because it's just as important as the technical side of investing, if not more. Okay. So from this, we're going to look at how we can embrace behaviors that will promote and lead to long-term wealth, right? And we're going to start by looking at this cycle. Right now, you may be thinking this looks a lot like a market cycle, but really this is the short-term cycle of our emotions that researchers have found. So we're kind of going from optimism and thrill, euphoria, and then following that denial, fear, anxiety, all the way to despondency. But this looks a lot like this curve, which you might know a little bit better. I pulled this from a great video on Ray Dalio's channel called How the Economic Machine Works. And he explains market cycles, how it's a cycle. It goes in and out. And if we zoom in too much on any part of that cycle, it's going to look like end all be all. But when we zoom out, we realize we're just in a cycle. And the same goes for our emotions, right? So in our cycle of emotions, I want to point out two parts, right? We're looking here. This is the point where we probably feel the best, except this is the point where we're experiencing maximum financial risk, according to some research that's gone into behavior around how people feel and where their investments head. So maximum financial risk, except over here on the other side, this is maximum financial opportunity. And if you want to explore this more, I include this link at the bottom of this slide here. Feel free to dive into this research. But what we want to get out of this is basically, how can we better understand our emotions so that we have the kind of behavior that allows us to take advantage of that maximum financial opportunity point, right? We want to prevent the financial risk, and we want to leverage and take advantage of that opportunity when really it looks like that's kind of when we're not feeling our most confident selves back there. All right, so how can we do this? What do our emotions do to our behavior? Well, our emotions are the drivers behind our behavior. And I specifically picked this picture, not just because there's a driving picture, but I'm going to come back to it because this is an emotional trigger for me. So we're asking ourselves, how do we stick to our long-term investing plan despite these short-term emotional cycles? The typical advice here that we probably have all heard is that you don't want your emotions to get in the way of your investments. This kind of hints that you might want to be suppressing those emotions, pushing them aside, ignoring them. But instead, I want us to understand our emotions and use them to support and propel our investments, or at least recognize when they're going to harm us. So we want to use our emotions to help us stick to our plan. In order to do that, we need to understand a little bit about our own emotional triggers, both the negative emotions, those hard, challenging emotions, and the positive ones that can help us understand and curb our behavior to lead to our long-term investing goals. So let's start here. I want to look at the emotions and how they can send us, sort of these negative emotions, how they can send us into this proverbial emotional downturn point, right? Maybe so that we can understand when we're starting to feel that way and recognize it, and then ask ourselves what type of behavior we want to take out of that. So first, when we're talking about more money, more zeros in that account balance, more money leads to heightened emotions typically, right? It leads to more anxiety, more fear typically in people. So if you're looking at more money, you might want to say, ooh, my emotions might be triggered a little bit more here. If you're increasing your exposure to the negative news headlines, this is going to heighten your negative emotions as well. We talked about this in a recent Goodegg Live and how these headlines are really clickbait, right? They're pulling out a tiny statement out of the context of the entire article and choosing to focus on that when it's not actually the reality of that market cycle or that news or that fact that they're trying to pull out. Finally, your emotional cycle is also heavily dependent on whether or not you have an investing plan, whether you've actually taken the time to set those long-term investing goals. If you have nothing in the long term, all you can do is focus on that short-term cycle, and you're more likely to be susceptible to that financial risk and not be able to take advantage of that opportunity. So I want everybody to reflect on this. You can take a few minutes now or just outside of this session. What are your personal emotional triggers that you experience that are going to send you down into that emotional downturn location? I'm a little bit in that anxiety and fear category. I start getting panicky and anxiety, and that's what's going to send me down into that. So I can stop and say, ooh, I'm being triggered by this emotion. I'm a little bit anxious. Is that true? Okay. And the next thing you can do is actually look at that fear. So when I'm experiencing anxiety, what is this fear that I have that's causing this anxiety to come up? This is an exercise that I recently got from a book I've been reading called A Healthy State of Panic. And it's by Farnoosh Torabi. She's got a fantastic long-running podcast called So Money. I believe Annie's been featured on it as well, Annie Dickerson of Goodegg Investments. And I really liked this exercise that she has because she's taking fear and saying, don't just push it aside. Don't say, oh, no fear, I'm fearless. Actually investigate it and see what it's trying to tell you. First, look at what's the intent of your fear. What goal is your fear asking you to protect? Second, how might your goal be compromised if that fear were to come true? There's a great exercise that actually we discussed in a podcast. I'll include that in the follow-up email to this about fear setting with Tim Ferriss. Also, Tony Robbins has a great exercise on this called the Dickens process, but it's really like allowing you to investigate, what if that fear were to come true? What would happen? What would happen in 5 years? What would happen in 10 years? What would happen in 30 years if I listened to that fear, if I allowed that fear to come true? And it's going to help you kind of back up and understand what that fear is protecting you from, but also what might cost you if you listen to that fear fully. Now, finally, this is the important part. Do you want or need to make changes to address that fear and modify your current plan so that you can still reach those long-term investing goals? Farnoosh tells a story about how she felt like her fear was telling her to protect her retirement nest egg. It was telling her that her risk was too high in the market. And so to combat that, she decreased her risk in her portfolio. But in order to have the same similarly sized retirement fund at the end, she committed to increasing a little bit more every month, a little bit more every year, so that she could still reach her long-term investing goal. So what kinds of things do you need to modify to listen to that fear? The fear is trying to tell you something, and be able to still stick to those long-term investing goals. Your fear wants you to take inventory of what you value. I really like that. So don't just push it aside. All right, this is the good side of that emotional cycle. We want to also remember that emotions can really help us in our investing. They are powerful drivers to building our long-term wealth and reaching these goals. Without those positive emotions, we may be not motivated to save as much. Maybe you experience an emotion that says, yeah, I'm going to save up for that, or I'm so excited to build my life towards that. They drive us to provide for our families. Maybe you want to save up for college for your kids, or I just recently opened up a Roth IRA for my kids, and I have a powerful driver to set them up for success, to maybe start their own business or invest in real estate as soon as they turn 18 on their own, all kinds of things. You can also be inspired to be able to give more. I also want to flip this too. I'm inspired to have the passive income, to have more time freedom so that I can volunteer more. So I actually even want to give more of my time, as another example of how that could work. So reflect at this point. This is kind of the fun reflection. What are the emotional or contextual triggers that you experience that send you up this path? So recognize what the emotions are telling you that cause you to save more, cause you to invest more. What are you inspired by? What are you excited to do with your long-term wealth? Be able to tap into those emotions so that you can, again, keep up the progress towards those long-term goals. These are really powerful emotions that you want to try to get back into. I bring this back up as just my example, right? These are some images that I have up on my image board behind my computer screen. And I do want to be able to take my kids on all kinds of international trips. I want to do wilderness trips with them. I do want that awesome customized adventure van one day. Ooh, to be able to camp in luxury, it would be great. So one day with those sweet mountain bikes on the back too, I'd take that as well. So this drives me to save. This drives me to invest. This kind of imagery, this kind of thoughts, feeling like I'm helping my kids learn about money along the way, that helps me to save and invest more. So think about what that is for you. Okay, finally, we have to touch upon that third element of how your negative emotions can be exacerbated if you do not have a long-term investing plan. Now, this can be pretty simple, right? This is so that you can help your investing despite those short-term emotional cycles. You stick to your long-term plan. It doesn't have to take a long time if you don't have one, but here are some things you can think about it to get that ball rolling. First, what is that big goal? Do you have a net worth goal? Do you have a passive income goal? And what do you need to be doing this year to get there? This can be finding a simple calculator on the internet. I'm actually developing one as we speak to be able to, provide to our investors, our friends, to be able to say, okay, if I want to build this much passive income with passive real estate investing, how much do I need to be investing this year in order to get there? How much am I able to lose, right? This is more of how susceptible am I to going down into that emotional downturn? If I were to lose any of my investment dollars, is that going to cause me to into a spiral of negative emotions, right? This is also a question of like, how much financial stability do I have? And am I comfortable with that? What is your emergency savings fund? Are you able to take a loss and still work towards your investing goals? Along with this, what type of risk am I willing to take? Risk and reward is a big part of investing, right? If you weren't taking on any risk, your money wouldn't be growing at all. You'd have your money in a savings account. So all of investments take on some level of risk, and that level of risk is really dependent upon you. For example, Farnoosh decided that later on in her investing, as she grew her retirement egg bigger and bigger, she wasn't willing to take on as much risk. So she found a way to decrease her risk and continue investing. This is really important. We're going to be talking a lot more about this year and helping give everyone the tools to assess their own risk profile. All right. I'm going to leave you here on a great sort of quote that I found from Seth Godin. And I like this because Seth is not like an investment guru. He's not a financial thought leader. He is a marketing thought leader, but he has amazing things to say about the way we live our lives. So being rich has less to do with the accumulation of money than you think. Rich is far more accessible than we believe. If you have resources, if you have the freedom to choose, if you have the ability to not just spend money, but spend time and to create the things that touch other people, you are rich. And you want to make sure you make some intentional decisions about what to do with that wealth. So I bring it back to this concept because I think that emotional cycle we can go down and fluctuate all over it if we don't zoom out and forget what it means to be rich to all of us. And that really being rich is sort of this equation of having the time, having the things we need to be able to live the life that we want. Okay. And if we're too zoomed in on the financial aspect of that, sometimes that can send us into those cycles a little bit more. So always zoom out and ask yourself what it means to be rich to you. All right, I kind of zoomed through all of that content. That was a lot. I hope that it helped you kind of think about some tricks and tools that you can have to be able to assess where you are on your emotional cycles, how you can stick to your long-term investing plan. And we're going to end this by just talking a little bit about the investments that we have open so that you can stick to that plan. And Jason, I want you to jump in here too. If you have anything to add here, we do have our pref fund open right now. This is our awesome offering that offers stable monthly cash flow. This is a fixed monthly rate that we're getting out of these preferred equity investments. This is a type of investing that was really only open to larger institutional funds in the past. It's a part of almost every real estate deal out there. But now we're able to allow our investors to make that money instead of just those big institutional investors. So this is something new here. You'll see a lot of education coming out from this. It's in multifamily properties, monthly distributions, 5-year horizon, and $50,000 minimum, but you can customize which assets within this fund you're actually invested in, which is kind of cool.
Yeah, this is a fun one because the preferred equity type of investment, it's still an investment in the types of properties that we've always invested in, but now we get to invest in a different way. So instead of putting your money to work for the long-term growth, this is a process of putting your money kind of in the top of the capital stack, right behind the senior debt, and we get access to the monthly cash flow. So you actually get monthly distributions. So we're all very used to seeing distributions grow over time and then show up in our bank account once a quarter. The preferred equity fund, the Pref Fund 1, is an opportunity to get a hold of the real cash flow on a monthly basis, significant cash flow, and have it consistent month in and month out. So it's a fun one.
And if this is something new to you, just take it on as a task to learn one more thing about this type of investing. The more you know, the more sort of opportunities you expose yourself to, the more, you have at your disposal, the more knowledge you have to be able to make these choices. And you might find that the Pref Fund, it really fits your investing goals. We also have the growth fund here too, which is investing inside of our hotel fund. So our growth fund too is investing in 2 select service hotels. And Jason, we do still have this opened. Is that correct?
Yeah, this one's open just for a short period of time, probably open until at least the end of the month, maybe at the beginning of February, but there is still a small window on this one.
Great. And I say that because we've already closed and are cash flowing on the 2 assets inside this fund. So the second that your funds are invested in here, they're going to start earning capital. There is no closing window, which is amazing at this point. So you can still get in on these 2. And once we do close this fund, our goal is to have another growth fund opened right behind it, because these are our ways to invite all investors into our funds, non-accredited and accredited alike, at a lower minimum investment, which is $10,000. So I mentioned let me see if I have a slide here on the Goodegg Hotel Fund. Yes, so the growth fund is investing inside the hotel fund. The hotel fund will acquire multiple hotel assets. Just due to regulation crowdfunding, we can only offer those 2 assets for a single growth fund, but we'll have multiple growth funds likely inside the hotel fund. But if you want the diversified approach, if you're a accredited investor, our 50K minimum here to be able to invest in hotels. Again, we have 2 assets already in this fund cash flowing, and we're looking and evaluating several more to be adding in the next couple months. So this is still open for another month or 2, but as soon as we have those assets in place, it will be closed. Yep.
That's right.
All right, so investing is pretty easy. Create your profile on our website. You can go to goodegginvestments.com/deals to see more about all 3 of these deals or any open deals that we have. If you're watching this at a later time, some of those deals may have closed. You're also welcome to reach out to us anytime. We're happy to jump on a call with any of you. Send us an email, investorrelations@goodegginvestments.com. You can even call us and it will send you to one of our phones or ask you to leave a message, and we'll get back to you within 24 hours to schedule a time to chat. Anything else, Jason?
You covered it all. Look forward to talking to anybody who wants more information. Please reach out to us. And really, the email is the best way, investorrelations@goodegginvestments.com. Please send us a note, and we'll be back to you quickly.
All right. Thanks, everybody, for joining, and we'll see you next week.
Thanks, Susan. Bye.